Yeah, but would love to chat with you. I'm sure Sarah would love to. Sarah Wood is your member
Okay,
benefit here, and I'm sure she would love to chat with you. Hey, welcome
perfect.
everyone. We're going to give it just a few seconds here as people begin loading in. We'll give it just a little bit of time. So yeah. So how's the Chicago? You're in Chicago.
I am in Chicago
How's the
and it's going to be 80 today. So
Okay.
we're
So what I was
happy.
going to ask you, we were 74 yesterday, which is the warmest it's been here. But then I took and dropped my son off at his day program this morning. And as I was leaving there, there was like this storm coming in.
Oh no.
We're not 70 anymore. I think we're in the 50s, and we had the worst lightning I think I've ever seen here. And I've been here since 1987 during this
Oh my
storm. It was
goodness.
crazy. So yeah, our weather has been a little volatile this
Very
year.
Minnesota of you.
Exactly. It's like you just never quite know what you're gonna
Yeah.
get, what you're
Yeah.
gonna get. But yeah, good for you. 80 on a Friday. That's
I
about
know.
perfect.
Not mad about it. I think there's a patio and a cocktail in my future after this.
I would hope so. I would hope so. Well, all right, everyone. I think we're going to go ahead and get going here. You've joined the latest in mortgage today. I am very fortunate today in that I have someone that I just met, and I'm very excited about that because I think she's probably a pretty cool person. At least she comes across as that way. Jen Poniatowski. Now, did I get that right?
Did very well.
Oh, good, good, fantastic. Who is the SVP of Market Growth and Expansion for Key Mortgage in Chicago, Illinois. Um, Jen, for listeners that may not know who Key Mortgage is, can you just give us kind of a quick picture of who the company is? And you're owned by a real estate company. And so kind of like what that means to you.
Sure, sure, sure. So we are an IMB based out of Chicago. We are wholly owned by Baird and Warner Real Estate, which is the number two largest real estate firm in the state of Illinois. So very different than like having an MSA. We are wholly owned by the real estate firm. So that gives us lots of kind of unique opportunities here. A lot of our we're heavy purchase business, due to our partnership. While we are based in the Chicagoland area, we are licensed in 17 states. So definitely a lot of initiatives for expansion. We're an older company, I would say. So Baird and Warner was founded in 1855. We actually did the first real estate transaction on record for $5,000. There's a lot of history behind the company. Fifth generation owned. We helped rebuild Chicago after the Chicago fire, not me personally, obviously. And so, yeah, we were actually Baird and Warner Financial, and in the 2000s changed our name to Key Mortgage to kind of not fit the box of having just to work with Baird and Warner. Our originators and sales teams have connections with agents from many different brokerages, but yeah, it's a very unique setup. We also own a title company and we just opened an insurance company as well. So we are definitely a one-stop shop.
Yep, full service organization. I love it that you can tout the first lending transaction for $5,000. Um,
Yeah,
that's pretty cool. I love
it
it.
is very unique. Yes.
So, as the SVP of Market Growth and Expansion, you mentioned expansion. What does that mean for you? What do you find yourself doing day to day?
I try not to sit in the corner and cry every day. I'm kidding. So I was actually brought in for a very specific role when I started here a little bit over a year ago. So again, traditionally, all of the business, the majority of the business were transactions that would come from our Bird and Warner partners, which
I
is
would think,
fantastic.
yeah.
The company has had many growth initiatives, and one of them was to expand opportunities. So my background is in banking and working in the credit union space in mortgage, and in that space I've worked with many different QSOs. However, being in the credit union space, I didn't feel like I was able to find a partner where I felt like was helping me grow. They just kind of wanted my mortgage business. So initially, I was brought on to open an affinity channel, which is a hybrid wholesale division that offers mortgage and real estate services to smaller to mid-sized banks and credit unions. And then in addition, leveraging them, if they had a specific portfolio product that the retail side would use, kind of having this bi-directional partnership. So that was actually just launched earlier this year. And then in September, I was given the opportunity to actually take on all of the sales activities at Key Mortgage. So in addition to the wholesale channel, I oversee our retail channel. And then we also just opened up a very small consumer direct channel that helps with a lot of retention with our existing clients or past clients and growth in that realm. So, yes, so
You have
a
your
lot.
hands full. That goes back to your first statement of trying not to be in a corner.
Yeah, I do. Because
Lots of
I
white
was,
space.
yes, I started handling just banks and credit unions, and now I get all of the yellows who I love very much. So
Yes, we
we're
all
surviving.
we all know what some of those challenges could be from day to day for sure. So let's talk a little bit about like what's going on in the out in the market. Of course, everybody knows that rates have kind of stubbornly stayed at a certain place, but I feel like sometimes it's like that maybe is the new normal, and we just, maybe not everybody has accepted that as the new normal yet, but how do you think that having rates be where they're at right now, how is that shaping the conversation that your LOs are then having with their borrowers?
It's just so funny what a quarter of a percent can do to the mindset of consumers. It's so funny when we had rates dip just to like 5.99 for one day. The bump in activity that we saw was kind of amazing. So, I honestly think it's in the mindset of the consumer. It's been challenging. We saw a little pop in refinance transactions, which is a little bit different for us because we are very, very a heavy purchase market. But it's been challenging to get some of those consumers off of the sidelines. But it comes down to education, looking at the overall picture of our consumers and our clients' financial, setup, and it just takes a lot more time in advising than it has in a kind of semi-volatile market like we're in.
Yeah.
And it is the new normal, I mean, in my opinion. And I've spoken on this, like, I've never forecasted rates to go back down in the lowest fives this year. Like, this is kind of where we are. And I think that there is like a select group of individuals that are, understanding, like, wow, my life has changed. I have to move, or, I'm in a situation where I have to refinance, and they're, kind of understanding that this is just where we're at, more so than we saw last year. But there's still definitely a challenge.
Yeah. I think there's going to be more of that too, because I think people can hold out for a certain period of time, right? And then once they truly do realize that this is not going to be dramatically different, probably one way or the other. So
Right.
what am I waiting for? What am I
Yeah.
waiting for at this point? We both are Midwestern people. You being in Chicago, me being in Minnesota. Do you think that the Midwest market is different from like what is seen in the national headlines?
I 1,000% think that it's very, very different. I know that it's different. If you look at the headlines, it's, there's easing in the market, and it's not that way in our footprint, at least in our Midwest footprint. Inventory is as tight as we've seen it, and it's been tight. So it's just like we're waiting for something to break, and it hasn't. I tell the story. It was a few weeks ago. I live in the city, and I was walking my golden doodle that I have to name drop because I love him, Sebastian. But I'm walking him, and I see a line around the corner, and I'm like, is there a new restaurant that opened that I didn't know about? And it wasn't. It was a line of people waiting to get into an open house. And
Oh my
it
gosh.
was incredible to me. And so what's interesting is that there is not a shortage of buyers. but there's just not enough homes. I think I read a stat recently that there's 1 in 1,000 homes versus interested buyers right now. So it's really, really, really tough. Where it feels like every offer has multiple offers. Um, so it's tricky. It's tricky. And then being on the lending side of that, we're working with our real estate agents and our clients to try to, you know, paint this amazing offer for them. But it's tricky.
Yeah. Yeah, we're not seeing, I am seeing, which granted, we both have weather related
You know,
issues in the winter that things just look a little bit different sometimes. And not a lot of people don't put their houses on the market. I think I have seen more houses on the market. And I'll say on the market, I don't think they actually make it to being on the market technically. I've
right.
got one down the street from me that had an open house the other day, and it wasn't even on the market yet. And I think there's a sold sign out in front of it this
I'm
morning.
sure. I'm
Yeah.
sure.
And it's seeing some more of that. So I feel like I see more activity, but I think it's not really changed any. It's just that signs now are out that you can see them. It's kind of spring and that type of thing. One of the things that was announced, I think MBA Newslink is the person that put this out. There's 35 trillion in home equity available out there right now. And I know that you are not a HELOC provider, so not in the HELOC business, but can you tell us like what path you've taken knowing that and how maybe you've like what's your strategy and how you've taken maybe advantage of knowing that information?
Yes. So we have an amazing marketing team, and have a we really pay attention to our customer insights. So we nurture our previous clients. We watch their equity. We watch their interest rates, and we do a lot of behind the scenes drip marketing, to letting them know how much money they have available to take out if they wanted to cash out. If even, what rates are, what new payments would be if an interest rate were to drop by X amount since the time they purchased their home. So we leverage a lot of the data that we have and we keep, and we really nurture our borrowers and try to do as much as we can, for the LO. So then the consumers are just responding and, giving us the opportunity to help them achieve that without going back to their servicer. So, because not only do we not offer HELOCs, we also aren't a servicer. So we have that challenge. So we are very, very intentional on leveraging the data that we have to making sure that we're in front of the clients as much as possible.
Yeah. And how I'm interested in knowing this specifically because I feel like the technology has probably assisted you
Yeah.
in some of those things. So, like what types of technology or has technology been a big driver for you in doing some of those functions?
It's literally all of it. We couldn't do it without it. So we partner with our CRM. I don't know if you're wanting me to name drop or not.
Yeah, yeah.
Okay. So we use Total. We're very, very big fans of Total Expert. But
Shout
we
out for total expert.
I
Brian
know
is
it's just
not
a quiet
working.
one. I thought it'd be okay. I know they're big supporters of TMC as well. I've used them in my previous life. I think they're a great, great
We
firm,
have
but
a comfort level there.
we leverage all of their insight tools, and all of their nurture campaigns, and we have found great, great, great success with it. And I honestly don't think that we could do without it. Expecting LOs to mine their database of previous clients to figure out who'd be a good refi opportunity is A, something they're not ever going to do, but B, it's time consuming. It truly is. And we just don't have the resources or the time. And so we try to take as much heavy lifting, and like what our senior director of marketing always says is we're always working behind the scenes for them. And that's, I think it's supportive of them staying in front of their clients as well. And then the
Yeah.
messaging looks like it's coming from them. So as far as, the client's concerned, it is, a loan officer reaching out to them, or mining their database and making sure they're staying on top of it.
Well, that's what you're supposed to be using technology for, right?
Of
Technology for
course.
levering people's best skill set that they have. And so if
Mhm.
that's not a skill set of a traditional LO, then you're just using them at their highest and best use.
Exactly.
Yeah.
Exactly.
Yeah. Um, Obviously, servicers, you mentioned servicers before as being like a threat. And I think that you mentioned that you're trying to stay ahead of them. What actually, I mean, is that just messaging going out during the day? What does it look like day to day as far as trying to stay ahead of those customers?
It is a lot of messaging for various different things, maybe not necessarily even transactional related, wishing them a happy birthday, wishing them a happy home anniversary, those little things. It sounds cheesy, but the servicers aren't doing that.
Yeah, I was gonna say people notice that kind of stuff. I know I do. It's
Yeah, yeah. We are rolling out is kind of like an elevated retention program that will include gifting. So our previous clients will receive gifts quarterly to those that opt in. So that's kind of another step to stay ahead of them. It's we're competing with a lot of things with the servicers rate specifically. However, if you make a really deep connection or relationship with your client and they look at you as your trusted advisor, and then the ancillary marketing and keeping up with them, I think it all comes together, and we have, like I said, a great success rate from our efforts in that.
fantastic. Um, Obviously AI is like the word of the year, I think, in mortgage. It probably has been for a little while, honestly. But it's really shifting how lenders, interact with their providers. What are you experiencing related to AI as a company in 2026?
Yes, I am an AI advocate. I always say that, I don't think AI is going to replace jobs, but if you don't know how to use AI, you're going to be replaced. So Key Mortgage was actually an earlier adopter of a lot of AI tools that we've started leveraging, specifically on the operations side. We are rolling them out on the sales side, but we have, brought on vendors that review income, review tax returns. We have guideline vendors where we can ask it a question and it sources not only all of the GSEs, but all of our additional investors and our internal overlays. I look at it from just like a leadership standpoint, writing policies and procedures. Like, I hate that crap to begin with. So, but it gives us it gives us the opportunity to leverage, just make everyone's jobs easier. So we're focusing on building relationship. Like, I realize that we're on the finance part of it, but it's a people business. And so if we want to continue to grow and build relationships and develop more business, some of the tactical things is where we should be leveraging technology in.
Yeah, I couldn't agree with you more. And it sounds like, which you can confirm this or not, a lot of people have talked about building AI strategy in order to take care of additional business if the market changes. But it sounds like you actually are doing that more as a strategy, no matter what happens in the market.
Correct.
Yeah.
Correct.
And so do you think that, IMBs notoriously have moved maybe a little bit more quickly than depositories, just because of their infrastructure? I think a
Right.
lot of the time they can make decisions quicker. Do you see this as one of the biggest competitive advantages that you have?
I do. So coming from a depository, your company, a depository, your company, it's not just mortgage, right? You have consumer lending divisions, you have, commercial divisions, you have whatever. The banking side of it, there's a lot of other departments that you're competing with. Whereas on the IMB space, we sit in a room every day trying to solve for the same thing, and it's to get consumers into homes. And having one focus gives us the ability to be a little bit more agile on initiatives like implementing AI or better technology, because we have one sole purpose.
Yeah, and obviously you've been using a lot of AI things, and it's changing like so fast that things that you couldn't do yesterday, you can now do today. What do you think the biggest AI payoff is that you'll have, the next one that you'll have? Do you think it's on the origination side? Is it compliance? Where do you think in your process that that probably lands?
Yeah, so I think it's all of the above. So you did just mention something that, I don't want to call it a challenge, but because it's changing and evolving so quickly, because we were one of the earlier adopters for our size, I should say, um, looking at these vendors, things are changing, and it's like, oh gosh, did we, get in too quick with the wrong person? So it's really important, like when you're diving in, to do your homework because it's incredible, and just like the 12 months that I've been here, how it's evolved, and it's like, wow, are we already looking at another, provider because somebody's edging up. So that's a balance. I think that it's going to impact everything. But I like I just mentioned, what I think we're trying to solve for internally is taking a lot of this like tactical work off of us. So I look at the role today of like an LOA, and I love that they help deal with the paperwork and double checking files, this, that, or the other for our sales team. But I would love to see their position, and I truly think that it's going to in the next, probably as early as 2 years, like where they're just all of this work is going to be generated and verified by AI. So then we can transition those roles to be solely marketing support, business development, more sales oriented. And those are the things that help build businesses, not, checking somebody's income or,
Yeah.
making sure that we have 7 pages of a bank statement. And that's annoying.
Those aren't the things I love to do either, but I was on the sales side too before I was here. So like all of those things, if you could just get rid of all of those things, I think that's fabulous.
I know.
Not everybody necessarily feels that way, but I do think it is going to change the environment. And kind of feel like if you're not doing some of those things, you may be left a little bit behind, right?
I agree. And think about, retaining your employees, recruiting. It's, as this evolves further, I think that's going to be something. I think it's so new that I don't necessarily think it's in the forefront of individuals when they're looking to make a move. But when you're looking at, growth opportunities or the ability to grow your business, the things that can be made easier or streamlined by technology, going to a firm that does that. It's no different than, 7 years ago when everyone was shopping companies that had the best tax stack, had the best POS and
Yep.
whatever. And now that's kind of like everybody kind of has that. So now I think that in the nearer future, we will see, people when if they're looking to make a move, looking at, more streamlined activities,
Yeah.
especially on the sales side. What's the least amount of work I have to do on a file?
If they're coming from a place where they already had that, but they're still looking to make a move, they're,
Yes.
it's going to be seen as that's the equal part, right? And if
Yeah.
they're not at a place like that, that's probably what they're looking for because they've heard from their friends that they have it
Mm-hmm.
somewhere else. I was going to ask you that if you think that any of the AI processes that you have put in place have been instrumental in attracting other people to your organization.
Like I don't think yet, but I think it will become more common in the nearer future. I think that right now, just looking at the industry as a whole, it's everyone's trying to figure out how to dimension implementing AI in the space and what really works best, and for businesses, and still making sure that there's a personal touch, but making sure that processes are streamlined, and that balancing act of where it should be leveraged best. I think that as an industry, we haven't 1000% figured that out yet, but I think that everyone's getting a little closer every day, and it will make a great impact in the near future.
I do think that different companies, there are different degrees of figuring it out
I
there.
agree.
Yeah. It's like not everybody is at the same spot, although I think everyone is looking at it. So let's talk a little bit about market expansion strategy and things like that. When you're looking at, when Key comes in and is looking at a new market, maybe a market that you haven't been in before, what are the first things that you're looking at when you're wanting to expand into a specific spot?
So because we're doing this now, there's a lot of kind of a hefty balance of data analytics, but also like anecdotal theories.
Yeah.
So, for example, we are the two major markets that we're looking at moving into outside of Illinois would likely be Florida and Arizona. Arizona because we have individuals that have relocated out there, so we have boots on the ground already. Florida, we have a Baird Warner office down there. But then you naturally look at where do Chicago people go? And those are two very large relocation places for us. So we're definitely in the infancy stages of looking at expanding, but that's kind of, where's the data? Where are people relocating to? But then where is our brand recognized? So I think there's a lot of like brand awareness that goes along with it. And in the Chicagoland area, like I said, if I say I work for Baird and Warner, 9 times out of the 10, somebody knows what I'm talking about. And when I go down to like Naples, Florida, 75% of the people that I meet there are from Chicago. So I say that brand and they're aware, and pretty similarly to Arizona. So um, those are two of the things. Another part, when we say market expansion, also expanding in our own footprint.
Yeah,
So
sure.
yeah, Baird and Warner just acquired another real estate firm last summer that brought on another 400 agents, and they're heavily populated in like the Chicago metro area. And it made us look, and I'm like, wow, we don't have enough sales folks to support our new partners. So even just doing an expansion in our immediate market, just due to the demand that we have for our new partners and to be able to support them, has been another pretty large initiative. So I think when people say like expansion, it's always like we're going to go to New York or whatever that looks like. But we're also looking to expand in our own immediate footprint as well.
Sure. Capture more business where you are currently. Usually
Mm-hmm.
that's the most effective and profitable way to gain more
Yes, it
business
is.
for sure. Yeah.
Yes, it is.
Yeah. Um, how um how does that, so you mentioned that you just acquired another company. Like, is that part of your strategy going forward?
I believe it is. I can't say too many things. I think as an organization, we're looking to acquire in all business units different things. I think, but it is. We're a very strong company. I know I called us old, but we've also stayed innovative. I feel like
Oh
we're
yeah, those are two completely different things.
sometimes I feel like I work for like a 165-year-old startup, which is why I sit in the corner and cry sometimes. And no, I'm kidding, but it's a very innovative company. So I think there is a little bit more of acquisitions that they're looking to be had in the future.
Yeah. I think that our whole market is honestly, I think that we're not, I think people felt like last year that there was a lot of that type of activity. And I personally, I don't think it's over yet. I think there's much more of that. I think there'll be more consolidation
I
in
agree.
our, especially if we stay in more of this kind of static market that we've been in. The
Yeah.
longer that goes on, I think that we're probably going to be more prone to have that.
Yeah. And I think sometimes acquiring it kind of has a negative intonation, but it truly isn't. It's just making two companies stronger.
Yeah, yeah. As long as you find the right culture, I think cultural fit a lot of times is probably more of a factor than anything else. And then you can use what's best at both places and take advantage of that. Are
I
you,
couldn't agree more.
so when you're out looking at talent or LO recruitment, what are like the experienced LOs, the LOs that you're trying to attract in? What are they? Is there one thing that they're telling you that they're not getting elsewhere that they want to have?
I think a common denominator from what I hear on a day to day is everybody's just looking to grow, and they're looking for support, and they're looking for opportunities.
Okay.
And in the competitive market that we're in, it's hard for a lot of other companies to promise that they can give that to you. Having the resources, having the support, but to like give growth, like actual growth in your career. And again, it's very competitive, but that's basically what I hear on a day to day.
Yeah. So, in essence, probably the culture, working with the people that you want to work with, as you're able to grow your business and being completely comfortable, would you say that that's probably more important than
I 1,000% agree.
in the past? Yeah.
Yeah. We've recently brought on folks coming from much, much larger firms that want to go somewhere small because they're going to get the attention and the support. And, they want to have relationships with their peers and they want to be able to go to an underwriter to, have a question. They want to be able to come to me um, and then want to have fun after hours, which
Yeah.
is do all of that very well.
We always want to work with the people that we enjoy working with.
Yeah.
Sometimes product and stuff like that doesn't matter as much. It's the same for the people that you get to work with every day. I mean, we all work a lot, especially in
Right.
you might as well be happy and be enjoying yourself at the same time. So yeah,
Yes.
we are at the bottom of the hour already. That went by
By
so
very fast.
yes. It was absolutely wonderful to talk to you. I appreciate the fact that you would just hop on here and be so willing to do that with us. I'm hoping that we see you at one of our events sometime soon because I would absolutely love to connect with you in person as well. Thank you so much for doing this with us
Of
today.
course.
You have
Of
to come
course.
back and do it sometime again. I would love
I
that.
would love to.
All right. Thank you.
Thank you, Faith. Thank you
Thank
for
you,
having
everybody, for
me.
joining us today. Come back in a couple of Fridays and join us again for the latest in Mortgage Today. See ya.